also stands for National Association of Securities Dealer Automated Quotation. It is the second largest exchange in the world. And in 2026, they're soon going to launch a 24-hour trading system. So you can start trading on the Nasdaq from the Asia Open all the way to the US close. And this will be the first ever fully automated 24 hours trading exchange. And so with that, we have David here, who is head of index research. Now, Tom mentioned QQQ. It ultimately tracks the Nasdaq 100. I don't know if you guys know, but the Nasdaq 100 is celebrating its 40th anniversary this year. So very exciting. So David, what can you tell us about the Nasdaq 100?
Yeah, sure. And I really like your fun fact about the full name of Nasdaq, because it's always the trick questions within our annual events, and like maybe half of the people get it right, to be honest. I'll just start very quickly with us. We established the exchange in 1971, and as you said, like the first fully electronic stock market. So we are really like the original disruptor in the market that we launched. And fast forward today, like 8 of the 10 largest public companies in the world are listing on Nasdaq. So for Nasdaq 100, as Tom has nicely like summarized and concluded, like we are far more than just a tech index, because the definition is more about we are capturing the largest 100 non-financial companies in the Nasdaq stock market. So for all those new economy sectors, tech, consumer discretionary, healthcare, like we got almost 85% of weight in this index. And I'll just take an example. We can also find innovators in the healthcare sectors like Intuitive Surgical. Like they are like a leader in the robotic surgical field, and also with their launch of the latest Da Vinci 5 systems, is gaining traction these days. And just one more point, it's more than an American story. For Nasdaq 100, we also capture the international companies that is listed on the Nasdaq Stock Exchange. One of the examples is Shopify. It's the second largest Canadian firm. They're providing tools and also payment solutions for global e-commerce merchants. So they just transferred their listing to the Nasdaq in March recently, and they get into the index.
So if we think of the Nasdaq, oftentimes everyone thinks of technology, but as you mentioned, healthcare, consumer discretion, and communications is a big part of the index. What some of you guys may not know is oftentimes a lot of these companies, when we think of Apple was considering where to launch. And back in the day, they actually chose Nasdaq because they wanted to go away from the norm. They wanted to go with the one that was more creative. And I don't know if anyone follows Michael Jordan, but it's kind of like when Michael Jordan went with Nike as opposed to Adidas, because Adidas was the up-and-coming shoe brand, and Nike was still the very small person. And then now Nike is significantly bigger than Adidas. So that's the kind of analogy between Nasdaq and the New York Stock Exchange. But if we look at other sectors beyond tech, what do we see in Nasdaq?
Yeah, I'll say I really like this because we can also think about the second order effect with all the AI transformation is doing. And one of the sectors that is also in Nasdaq 100 is the cybersecurity firm, because they have both the growth and also the defensive elements. We are seeing like the use of AI by cyber criminals and also the cybersecurity teams. So let's say for the ransomware attacks these days, it's actually getting much cheaper or easier for the cyber criminals to use because of the rise of these the ransomware as a service model. And when you look at some of the most basic plan of the cyber attacks, of the ransomware attack, it could be as low as $40 per month. So that's just like you're subscribing to Netflix for these cyber attacks criminals. So you can get, it is easier, more automated, more personalized for the cyber criminals to launch an attack. And then at the same time, we also see the cybersecurity team, they are also able to respond to the threats more quickly and at a better accuracy due to the use of the AI technology. They are able to respond to these really quickly. So with all this greater intensity and also the frequency of attacks, so that's why it's very natural for the need for cybersecurity solution will increase as well. So essentially, I'll say for every company with valuable data, investing in cybersecurity is just like paying for utility bills, water, or electricity. It's a must, essentially. And just one more topic is about robotics. We're seeing like the robots are getting smarter these days. they're better explaining themselves. And the magic ingredient is, of course, about the AI, the latest multimodal AI models. So we've been seeing the robots, they're able to learn by imitating the behaviors in both the physical and also the virtual world. So this is very important. And another driver is also the reduction in cost. We've been seeing some predictions that for the humanoid robots, those robots that resemble human in shape, they can decrease the cost by more than over 50% in the next 5 years, according to some estimates. So we've seen both these factors can really drive this industry.
So I definitely think that in terms of how AI is being adopted right now, it's definitely more and more prevalent. And just yesterday, I was looking in the terminal. I don't know if you guys know this, but inside the terminal, there's actually a function that will automate whatever it is you're reading or whatever page you're looking at. So if you're looking at a ticker, you can type in AI, and then it'll give you a summary of that page. So even within Bloomberg, we're using it on a daily basis. And so I think as we look at the Nasdaq 100, there's a lot of companies that are more than just that company. For instance, if we look at Amazon, they own Whole Foods. Whole Foods is a grocery store in the US. If we look at Google, they own YouTube, so it's a social media provider. And so a lot of these companies are more than just tech. And if we look at cybersecurity, healthcare, those are definitely areas that we're going to see grow. So we can't leave without talking about the US market. What's your outlook for the US?
Yeah, I think we're seeing a lot of uncertainty that is because of the macros or the policy making. But then I guess ultimately we need to focus on the bigger pictures, right? The investors will look at the fundamentals ultimately. And for the US, it's still the largest market for the innovations. We have the largest pool of companies with growth and also profitable companies. And this is really essential. And you also want to invest in a market, in the jurisdictions that you are most likely to be rewarded, and because of all this structural advantage of the US. And let's also talk about some figures. For the first quarter, we've seen the earnings growth of the Nasdaq 100 companies. It got a growth of 21% year on year. And that's the third consecutive quarter that the index is achieving over 20% growth. And what about in the future? Even with all those uncertainties, the analyst community is still expecting a 15% earnings growth for the index. So this is still outperforming the rest of the broader US market or the European market. And lastly, I think for the AI transformation, it's going to be broadening. So for the large cap companies, no matter in the tech, consumer, or healthcare, they'll be able to benefit it in terms of the productivity gain and also the reduction of costs in automation.
So I think if we look at the Nasdaq 100, it's celebrated 40th anniversary. To what David was saying, the performance is double digit. It's almost 15% year-on-year return since its inception 40 years ago. And as Tom was saying, it's close to double the S&P 500 return. So it's done phenomenally well. What do you want investors to take away about, if it's one thing that they remember about the Nasdaq, what is it, David?
I'll say it's really important to keep on investing, because if you look at all those financial crises, the rebound of the index is really impressive. Even for during the COVID-19 pandemic, for the initial phase, there was around 30% drop in the index. But then if you want the forward 1 year or 2 year rebound, it's really impressive and has been outperforming the broader market in general. So it's more about the resilience is also an important factor for the index.